begin our group project for ECO211. Before we proceed, we would like to introduce ourselves. My name is Nur Afira Iskandar.
My name is Normasayu binti Marni.
My name is NurDiyanti binti Muhammadinur.
For today's video, we would like to discuss three topics. First of all, how to calculate national income using two approaches, which is expenditure and production approach.
Next, 5 uses of national accounting. And lastly, 5 problems in calculating national income.
Without wasting any time, let's go!
Hi, it's me. I'm going to present the methods of measuring national income. National income is capable of being viewed from 3 dimensions, includes total output, total product, or total expenditure. The fundamental identity of income equal to product equal to expenditure gives the same results when we measure national income. National income can be calculated using 2 approaches, which is expenditure approaches and product approaches. In this method, national income is obtained by adding all the expenditure on goods and services in a year. National expenditure is made up of 4 economic sectors. The first one is personal consumption, which is known as C. Personal consumption includes the purchase of goods and services produced by firms, individuals, or households, such as personal computers, shoes, and etc. The purchase of stocks by individual are not included because they are included under investments. The second one is investment, which is known as I, refers to the purchase of capital goods by firms for use in production and in changes in the firm's inventories. As we know, inventories refers to the stocks of raw material, semi-finished products, and unsold final products. Third, government spending, G. Government spending is the expenditure incurred by federal, state, and local government for final goods and services, such as schools and hospitals. Lastly, net exports, X minus M. Net exports is the difference between the value of exports and the value of imports. In the expenditure methods, gross domestic product, GDP, is calculated by adding up all of the 4 items of expenditure as follows. GDP at market price equal to C plus I plus G plus X minus M, which is GDP, gross domestic product at market price, equal to C, personal consumption, plus I, investment, plus G, government spending, plus net export. The following are the formula for calculating national income and disposable personal income. So all of these formulas are related. The first one is GNP, gross national product at market price, equal to gross domestic product at market price plus net factor income abroad. Second, gross national product at factor cost, equal to gross national product at market price minus indirect taxes plus subsidies. Third, national income equal to gross national product at factor cost minus depreciation. Fourth, personal income, PI, equal to national income plus transfer payments minus corporate income taxes minus retained earnings minus social security contributions minus insurance premium. The last one is disposable personal income, DPI, equal to personal income minus personal income tax. The second method of measuring national income is product approach. Under product approach, national income is measured by net value of all final goods and service produced by a nation during a year. The product approach, also known as output approach or value-added approach. In Malaysia, there are 3 sectors contributing to the gross domestic product, GDP, which is primary sector, secondary sector, tertiary sector. Primary sector comprising mining and quarrying, agriculture, forestry, and fishing. the secondary sector comprising manufacturing and construction, the tertiary sector comprising electricity, gas and water, wholesale and retail trade, finance, insurance, real estate and business services, transport, storage and communication, government services and other services. Final products from all these factors are added up to obtain gross domestic product (GDP) under the product approach or the value-added approach. This is the formula of product approach.
Hi, so today I will present the 5 problems of measuring national incomes. Theoretically, measuring national income entails a large amount of data collection and calculation because it involves the measurement of the total product and services over a large region. So the first problem is problems of non-monetized sectors. The existence of large number of non-monetized activities in the country, especially in the agricultural sectors, makes computation in the national income more challenging. This is due to the fact of a large quantity of the output do not reach the market. The second one is underground economy. GDP estimates may not take into account the underground economy in which transactions contributing to productions, such as illegal trade and tax avoiding activities, are not reported, thus causing the GDP to be underestimated. The third one is non-market transactions. A number of productive work is carried out in the economy which do not involve the payments. Hence, no money changes hand and subsequently no payments recorded. The fourth is problems of expertise and modern machinery. The lack of professional skills is a major problem in third world country because their services is very important in estimating the national income data accurately, and non-availability of modern machinery will cause more challenge. And lastly is problems of double counting. In the national income, double counting will appear when both finals and intermediate goods are included. That's all.
Hi, today I'm going to talk about 5 uses of national income. National income is about expenditure and income of a country. The first uses of the national income is to compare the standard of living comparison. This standard where the info of the country will be used to compare within country A and country B about the income. For example, the highest standard income such like USA and Japan, while the lowest standard just like Cambodia and Vietnam. The second uses of national income is as national planning. National planning where the data of the national income will be used to forecast for the future, such like short-term planning and long-term planning. For Malaysia, we use it as 5-year period planning. Third uses of national income is as distribution of income. As we know, income come from different factors such like rent, wages, interest, and profit. The fourth is national expenditure. National expenditure divided by 2, which is consumption and investment. This is divided to calculate the reasonable depreciation for the capital stock. Last uses of national income is as inflationary and deflationary gaps. This data will help us to purchasing power of money and help the government to implement the anti-inflationary and anti-deflationary measure to stabilize the value of money.